Today's number is 550 because we're about to face off the most important cycle in the world right now. What happens with Bitcoin and whether it can break everything that we know about it. It usually loses around 85% from this current point forward, but it could be time that the government policy and other things change the game. Could that be a fool's errand? Well, in today's video, we'll break it down and of course, look at why the S&P 500's new all-time high close is such a big deal. It looks kind of like 2021 and reminds us that maybe we're seeing a bit of a change of what Wall Street will like over the next 6 months and how this could be actually really worrying for us as investors over the next couple of years. Momentum stocks are starting to lose ground and it looks like that one stock market area that no one likes, being value, could be on the rise. Guys, join us in a special weekend edition of Stocks, Commodities, and Cryptos around the world. Great to have you here. We'll see you in a moment. Well, welcome back everybody to the special edition of The Daily Show. My name's Thomas Atkinson, and in today's video, we have a lot to discuss. The latest macro, the data, and of course, where is Wall Street moving their funds right now? Are we starting to see the movement into new markets? There's a lot to talk about, but let's kick things off here with the big storylines. Then we'll go through some of the hard data, the options flow, and of course, the key levels. First up, JP Morgan. They're allowing Bitcoin, Ether, and other things to be potentially used as collateral in a crypto push. And this is along the lines of also some of the government information that we're starting to get through here, which we've been talking about, has been pretty pro-crypto. Now, one of the worrying signs is that institutional clients will now be able to use their holdings of Bitcoin and Ether as collateral for loans by the end of the year. Now, depending on how this looks, it could be kind of scary because, of course, it says here the program will rely on a third-party custodian to safeguard the pledged tokens and builds on JP Morgan's earlier move to accept crypto-linked ETFs as collateral. Think of it like this. Back in 2017, Jamie Dimon said Bitcoin was trash and that you shouldn't get involved in it. Now that there's money to be made and we fast forward to 2025, of course, Wall Street is all over it. And this could be the beginning of something really scary when you think about it. Imagine the leverage and the debt that is potentially going to come into the system in 2026. And it's one of the reasons why you have to follow this channel and many like it on the internet, because you're going to need to know your information, especially around the debt markets throughout that next 1 to 1.5 year period. Why? Well, I think things could get really ballistic and we may be looking at things similar to the 2000s or even 2021 period where we saw a lot of markets kind of get ahead of themselves and then obviously get collapsed upon. Are we in an AI bubble? I think almost certainly, but at the same time, bubbles can, remain solvent longer than you can. That's for sure in terms of the way that they move up. And remember, it really usually leads into more of a what types of sectors do I need to be in and how am I going to manage my risk more effectively. Here's a cool chart here from Jeff Weniger over on X, which actually shows S&P 500 growth divided by the S&P 500 value. And what you notice is that we're coming up on a very important trend line. You would have seen this as the thumbnail of today's video. Why? Well, sometimes we see big switch ups in the market. And remember, recently we've been talking about how the Federal Reserve obviously started their rate cuts and the way that the market structure looks, which of course we're expecting it to be bullish at this stage, could still be important in terms of the sectors that are going. If we do see value, Russell 2000 style stocks and other things doing better than the typical hyper growth gamma stocks, that is going to be actually a concern past the next 9 to 12 months. And it could actually be the early indicator that we really are going into a recession. And it may be kind of nasty. Let's firstly look at the CPI numbers though, because we did get some information and it looked okay on the surface. Basically, we're getting that kind of normalized inflation that's coming through. But I like this one here from Duality Research, which shows that by the end of the year, we're probably going to basically be benefiting from what usually is a drop off here in inflation near the end of the year, taking the year-on-year percentages down. But if we do average 0.3%, then we could be looking at around 3.66 for the next 12 months. Now, why is that important? Well, of course, depending on which one of these happens depends on whether the Fed has let things go too far. And a lot of you guys have been saying that inflation is kicking back in, that tariffs obviously are going to eventually come back through the market, and all of these types of things that we haven't seen quite yet could eventually become a concern. Remember, the macro side is very interesting, but it's all about when are we going to use the macro side to actually employ, edge into the markets. Remember, we're all about edge and price action. Let's have a look at the sentiment going around. It's bearish again across the board. It looks like most sentiment surveys are coming in. I looked at the latest fear and greed index, and it is in fear. It was in extreme fear last week. Now it's in fear at an all-time high. I don't think I've ever seen so ridiculous numbers coming through. But there are reasons why, and one of those probably isn't this one because most people don't look at this, but one of them probably is the fact that debt is on the rise and debt is accelerating in these markets. Now, this is more of an early warning system. Think of it as like the canary in the coal mines when it comes to this one. Have we stayed high for a long time when it comes to debt? The answer is yes. And this is, of course, an exclusive chart over on our X account and newsletter. Links in the description down below. Make sure to sign up for that newsletter into the end of the year as well, guys. There'll be an exclusive chart that links into these videos each and every week for you, completely free. Make sure to sign up. We just sent our last one out during the middle of the week. And I do plan on doing that until the end of the year so that you guys can see those exclusive charts. So we know that debt is rising up. And you might say, well, that's bad. Yeah, ultimately maybe, but debt is one of the best growth engines in the market. So of course, what's it doing at the moment? Well, at one point, all people were complaining about was that all these businesses, especially the big ones, weren't spending. Now we're seeing the big ones spending tons on CapEx. And what they're doing is they're all investing into AI. Now, we have absolutely no idea whether that's going to pay off and who's going to win on this. And of course, we don't know who exactly is really going to be the winner. Is it going to be the hardware guys? Is it going to be the software guys? Who knows just yet? But one thing we do know is that if we are trending a very similar way to normal post-election years, then of course we could still be going in for a rush into the end of the year. And this is courtesy of Grant Hawkridge over on X. And you can see here that although we may have some volatility sometimes at the end of October, which is exactly where we find ourselves, that generally any dip is bought up. And that's what we've argued so far right now, is that we basically think that pretty much any volatility is going to be purchased up across the board. Let's have a look here at S&P 500 earnings. You might say, well, earnings might be bad. Well, it turns out earnings are really good. The so far numbers are amazing. 87% beats, which is pretty damn strong for this Q3 period. And this basically is above the 10-year average, above the 5-year average. And it just shows you again that at least for now, Wall Street's getting exactly what it wants when it's pricing in, or even better, when it's pricing in its forward EPS and forward expectations. The market doesn't trade right now, guys. It trades like 12 to 18 months off in the future. So it's always trying to figure out what's going on. And of course, generally markets will remain optimistic. And then when fear takes hold, boy, oh boy, do they get fearful very quickly as well. So we spoke about the idea that value might be coming back, but also high beta versus low volatility. Have a look at high beta accelerate away versus, of course, lower volatility. And you can see here there are many different ways to look at the Russell 2000. Again, this one's here from Duality Research, and there's been a bit of a disconnect here, which I think is something you want to continue to watch, particularly over the next 6 months. Also, one of the other important factors is that when we saw that IV rush, or the IV basically going up on the VIX, and we've got something else on that and very soon in this video as well, then we basically got it crushed again. That actually gave us a very interesting point. And in all of those points, according to Duality again, this is of course for the VIX, we were actually going to move up. And you can see here that while some of it was like a little bit sideways, generally speaking, there was melt ups pretty much across the board, which were kind of dull. So effectively, the market does look to be still bullish into the end of the year, which is pretty much now being confirmed by the macro. You know, you always say, though, one of the things that's a little bit scary is when all the macro looks good, yeah, that's when I'm usually most fearful. And I tell you what, it's starting to all look good. Have a look here, bankruptcy filings, the latest data showing it going down. You might say, well, wait a second, is that real? Who knows? The point is, those spreads are tightening. The bonds market doesn't seem to be concerned. We've also got, of course, one of the strongest months in the year, which has been taken here from Carson Ryan Detrick. And basically, if you look, generally speaking, this is a very strong month to own stocks, particularly tech stocks and small caps. And it is a very interesting period. And of course, at the same time, we face off on a key support for momentum stocks versus the S&P, which if broken to the downside, really will probably also initiate some of those things like value suddenly becoming more interesting. Remember that trend line we just looked at before, or even the continuation of smaller caps when you're picking the right ones. It's an interesting market to be in, and it's one of those ones that I guess you've got to be paying a lot of attention to because the sectors will matter. Remember, we love gold and silver this year. Last year we loved gold, and last 3 years we actually did. But that probably has sailed, as in we still love gold, we still love silver, but they're unlikely to give the superior returns that they did over the last 6 to 9 months. Let's have a look at the forward price earnings multiples. You guys can see here that we have some pretty interesting multiples. And this one here is courtesy of FactSet over at Seth Golden as well on X. And you can see here that if we are going to get these earnings multiples that Wall Street is sniffing at, and if we are to go above the 90s bubbles, man, there's going to be some big numbers potentially out of the S&P. Now, I'm not to say these are going to happen, but what I do think is that if we go into euphoria of people just taking on even more debt through this tokenization stuff, and of course what's going on with Bitcoin and Ethereum and other things, then things could get wild pretty quickly. So obviously we'll have to be paying attention to that. Another thing is we'll have to be looking at things like the bellwether stock index here, which Grant Hawkridge, of course, has provided. Because if we see here and it's starting to lessen or weaken, that's something that we saw happen back in 2022. We got a weakness here. We also got a weakness ahead of 2025's drop into, of course, Liberation Day. So why should we be paying attention to this type of stuff? It's often a lead indicator. And to me, what I think we've started to see, and I think a lot of us are agreeing, is there are cracks in the system, but it can take longer than expected. If I was having to guess, I would say we're somewhere around 1998, 1999 now when compared to the dot-com bubble. So was there more money to be made? Well, the answer was simply yes, there was. But of course, if you were caught in the wrong things at the wrong time, boom, oh, not so good, guys. So be careful there. It's going to get pretty euphoric potentially over the next coming months, especially if crypto starts to run, because of course we all know how crypto runs, especially if the alts do. Let's talk about how hype does come through though. How to buy silver. One of the most searched things just a week and a half ago, probably dropped off their face of the cliff over the last week since, of course, silver has lost over 10%. And that just shows you again, euphoria and peaking. It does happen across so many things. And this is a cool breakdown here from Blue Kurtic showing all the different places in the world that was being searched. And over here in the land of the spiders and the drop bears, we actually were the second highest searches here after the United Arab Emirates when it comes to gold. So obviously the gold is alive. I must be indoctrinating too many people here in Australia, guys, because the gold is alive and well in this country. But yes, maybe everyone that was lining up could have been a towel. It's a good one. It's that elevator theory coming through. On to gold. Gold ETF. Gold drops nearly 6% in one day. Of course, it's rare. When has it happened? 2006, 2005, that period there, running into, of course, the global financial crisis. So does that sound familiar? Well, if we are 98, 99, a lot of things could be syncing up here. And of course, this is all part of that or the idea of something like the fiat currencies in the world basically becoming useless over time. People are starting to lose faith in them. I'll have a little interesting fact for you here, though. When everyone thinks they're useless and when everyone thinks that they're done, often that's when central banks actually come and step in. And you'd be surprised at how effective their strategies can be to actually change the game there a little bit. So just remember, if we continue to get people that are going against fiat currencies, yeah, the fiat currencies can strike back. And I think that will be a video for another day. Silver spot lost its 9-week streak. We knew it most likely would. These are the results moving forward. They are not pretty. We obviously don't have too many reads, but the problem is it does look like a lot of these. So, of course, we have to keep that in mind. But we would say that this time is a little bit different because, of course, we do have great overlay bull markets here for gold, we've talked about, and we also have central banks, of course, purchasing. And this seems to be a trend that I don't think is going anywhere, which is obviously global central banks going to hold more gold than dollar as we're fully fledged in currency wars right now. Now, we mentioned Bitcoin before because this is the halving cycle. You guys have seen these charts. Look back on our other videos if you're interested. And you can see here 550, we're at around that point. Over here, you can see that we're getting close to the end of a standard Bitcoin cycle here from Brett Eth in terms of the ratio. And then, of course, you can see here bottom to bottom, halving to top, top to top, bottom to top. All of these numbers are basically where they were every other cycle. So this will be the one that, of course, could change everything about what we know about Bitcoin. Now, a lot of you are going to be in the bearish camp saying, why wouldn't it happen again? I tend to agree with you if it wasn't for the government policy. And the thing is, JP Morgan, remember at the start of today, are like, yeah, guys, we love crypto now. Come over here, guys. You know, that they're never, ever, ever going to do it without making it sneaky and nasty. So I would say now that Wall Street has entered the chat, they've entered your DMs, they've entered the cryptoverse. I don't even know why everyone celebrates it. Do you celebrate it in the links in the comments down below? Why does everyone in crypto celebrate it? 3 years ago, I swear if this had happened, everyone would have been complaining. But obviously people are after profit. So the one thing about crypto being, now so popular and Wall Street being into it is expect shenanigans. If I had to guess, I would say this breaks and that we do actually end up driving higher. And one thing is for sure is we've got some big numbers coming up. So we're going to be looking at those numbers very closely on Bitcoin as we look at the charts. Now let's have a look here at the most anticipated earnings releases. This week is big. Take a look at those numbers. Oh, there's some big numbers there. There's some big things coming out. We've got Microsoft, Alphabet, Meta, Wednesday after close, Chipotle, Amazon, Apple, Coinbase, Reddit. Whoa, this is a big week, guys. It is huge. And I tell you what, there is going to be some big movements on the charts because, as you guys know, expected and implied volatility can be pretty big. And one of the things about this is the implied volatility movements can get pretty wild, especially in the post. Now, if you guys have been trading options for a while, you may be familiar with the technique of IV crush. But the sponsor of today's video, Earnings Watcher, actually has brought out a new tool, which is called IV Rush. And I think it's a really interesting tool that I wanted to go through with you guys right now and basically break down. Now, one of the things that's scary about an IV crush is obviously you've got to kind of go in there, you've got to go through the earnings, I don't like that one. And then you've got to kind of go, all right, hopefully we get a crush here on the overall implied volatility. This is based on the statistics. And you can actually do it in this particular platform. You guys have seen me do that before. And of course, it actually goes through and scans for all the ones that might be looking pretty good. So it's pretty awesome for that. But what about IV Rush? The idea of getting into a position, which is straddling, and then, of course, getting out of it before the earnings result. Hey, that sounds pretty cool to me. And I also do like it because that's exactly what you can do now with the new addition here in Earnings Watcher. Links in the description down below, by the way, if you want to get a hold of a couple of specials that are exclusive for the FX Evolution community, which I think is pretty sweet. So let's have a look here at Apple. What you guys can see here is that each day coming in, generally speaking, if you go back over history, and what this program does is it goes back over history and it works out the median at the money IV and obviously works out whether it does rush into the end and whether there is expected or projected based on that history IV rush to potentially be making money from. Does it act like it usually does and have the options market been pricing that in? Well, if they haven't been pricing it in similar to this, there may be an opportunity for you. And of course, I'm using an example here of Apple, but you guys probably know that the best examples actually are on stocks that are also huge, but maybe not just quite the ones that you're always trading. You're not always going to be like going, oh, I should be doing this on a Google or I should be doing this on an Apple or something. In fact, I'll just show you here. And if we actually go to Google, what the program will tell you as it sets this up is it'll say, this is a stupid idea. Are you dumb? You don't want to be doing this one, guys, because the IV rush might be there, but it's already pricing it in. So obviously there are ones that are worthwhile looking at and ones that are not worthwhile looking at. And the cool thing is, of course, you can scan all of that within this platform. So once you've done it, it will also update during the day. You can actually see here every 15 minutes throughout the session it updates. And from what I've heard and what I'm seeing is basically a lot of these sometimes run into the end. And what you can actually do is during the session of the pre-earnings, because a lot of the best ones are after hours, is what you'll actually be able to do is get into positions during the day. And often there'll be like kind of like a position where it usually goes rally straight up near the end. And that's what it's done in the past. And you'll be able to, of course, potentially benefit from that. Now, obviously, there are risks, but it also does update the best strikes throughout the session. And again, that happens every 15 minutes. From that point, guys, you can also use a simulator to simulate your ideas and see whether it works. The cool thing about anything options is you probably should come in here and do some simulations first so that you work out that it did work or it would have worked in that position. Remember, there is a difference between sometimes looking at the real market and actually putting in the positions and recognizing all of that movement. And also there is a community on Discord for this group as well. So if you haven't already thought about it, check out Earnings Watcher. We often show them in terms of the implied volatility because you guys know I'm a big fan of looking at what the options market expects from a stock. That, I reckon, is pretty cool. IV Rush. Getting in, getting out before you actually have to deal with that incredible implied volatility and potentially making a little bit of profit. All right, so let's jump into the charts here and, of course, have a look at this S&P. The S&P rallied to an all-time high. That's a pretty big deal. You guys know when it gets to an all-time high, generally I expect more from it. Why? Because it's squeezing the shorts. So we suspected that it would probably be more on the buy side. We saw the advanced decline line down here starting to pile back in. And we didn't really get the normal pullback. We got like a 3.5%, 4% pullback. Generally, you'd expect a 5 to 8. Maybe that's still to come. But I think pullbacks are going to be met by bull demand for now because we've got this debt expansion going on. Here are the updated options high and low levels. You can see here, pretty clean break. Again, weekly is clean. That's not usually a bad sign for markets. So it's pretty strong across the board. And if we actually have a look at the options here, you can see that we cleared some pretty important levels. So, of course, 6,800 is the focus early this week. But if earnings keeps coming in the way it is, if it keeps beating the way it has been, then we're probably moving on up. And we could be moving towards 7K. Yes, I said 7K. Because that's actually the way the market will move if we get through 6,800. It will just kind of start positive gammering. It may take weeks, but it could drive up there, similar to the Duality Research report. Tesla also kind of came off that 450. Now, we actually talked about this in our previous video. If you're a Tesla fan, have a look at some stats there. You might say, oh, Tom, it went down, you stupid man. Well, yeah, it went down one day. But the thing is that you're always running stats. So you can't really go off one stat. Remember, if we get past 450, it's going to be positive gamma on top of that very interesting sell into 420, 410 area, and then rally all the way back up to 450. That's a pretty strong sign post earnings. So it often shows there's a bit of hype around it. If it gets through 450, it could be a real gamma event, especially to 500. Let's have a look here at NVIDIA. Still looks good on the charts. You guys know my opinion on that. And IBIT here, you can see we've got lots of 60 puts, lots of 61 puts. Nothing changes here. We're looking at the all-important 67 moving forward and 70. So that's where things could get crazy for Bitcoin if it's going to happen. Gold still trying to clean up exactly what's happening on the charts after that really big, of course, crash that really did happen. And it could get worse, I've got to say. Even though I'm a gold bug, it probably will start to get more volatile, I think, for a little while here. And then hopefully we'll resume the trend. Now, let's talk about IWM versus, of course, SPMO. So when you're putting in charts, you should always use crosses like this in TradingView. It's really, really cool. What this shows is that recently, and this will come as no surprise to most of you, is that we saw an improvement in IWM. And this, of course, is not considering the best IWM stocks either. So that's pretty cool that we're starting to see a trend. But this is actually what happened back in 2020 when we saw a very similar pullback start to occur in the stock market. And what actually happened was we got a bit of a change of the guard in terms of value funds and other things started to look a little bit better. Now, that could be happening again. We'll dive more into this over the next week. But even just the last week, we saw oil services come out of nowhere, start to look better. So oil stocks are doing better. We've also got still very strong pickups in what was the most hated Mag 7 stock, Google. Well, suddenly looks pretty good. I got to say, I'm pretty impressed with all the new deals, and I'm super impressed with the way they're implementing the AI, or whatever we want to call it, into the Google search. I think ChatGPT's got something coming for it, especially to the normal person. And I can see them making tons of money out of this Google. So that's a beautiful flag, by the way. So we'll see whether that can continue. One of the ones we found in our private community. We've been very bullish on it for a while. We shared it here on the channel, and obviously it looked good last week as well. What about options? And there's not even anything to say there about bonds, actually. The bonds, the spreads just continue to come down, so not showing freak out there. And the US dollar index actually rallied up again after dropping through the inflation figure. So again, it still looks strong towards that 99.85, and that's the level that we've been talking about. What about gold? You can see here it's holding the daily 20, which is an excellent first level. And it may drop that in the future, but generally speaking, a lot of people are going to be looking for it to go back to 42.50 first. That's kind of the way I look at it. Silver, yes, it's come down. 48 is the base for now. We knew that this would be a key level for it. And again, if it's going to probably do something, this could be the kind of way it does it. I think it's going to sit for a while and go up and down in a range. It had a great run. What about Tesla? Tesla, you can see here how it's fighting with that 450 level. 450, 450, 450. That's the key level for Tesla, and 420 on the put support. And Chinese markets continue to just slowly drive up, which of course we've been discussing. When we move over to semiconductors, they almost made a new all-time high when compared to the SPY, which obviously is bullish. So we're not going to look at semiconductors being negative. And you can see here that if you like NVIDIA, it actually made a little high over this kind of range. So again, a pretty strong close. So I think that the general thought here is that, again, ignore what's in the press. You've just got to go with the flow, and the flow has pushed towards what it has been for a long time, which is bullish with a wall of worry sitting behind it, which is rightfully there, but at the same time, it's been bullish. Nasdaq, what's going on here? You can see, guys, that it broke through that massive resistance. And again, that's a strong weekly close. Even if it pulls back now, you'd have to think there's going to be buyers. Levels like 24.8, that's going to be a really interesting zone if the whole tech sector does bust back down. And I think, again, buyers could be sitting there. Now, when it comes to Bitcoin, this anchored VWAP just keeps holding. And you can see here it's come back up. It's not out of the problems yet, though. So 116.5, that's going to be quite bullish for it. And of course, I do also like the idea of a 98 swipe. So like this. And that would maybe get more people into the selling because it's the end, because they'll go, it's a Wyckoff. Could be, but at this stage, we still think the government policy is going to be strong. But I noticed that Trump and many others, including the banks, have come out and kind of gone positive. And we do have a whole bunch of announcements on exchange traded funds coming through. And all of these can be catalysts that go into the press. The price can often go above them. Like just this weekend, one of your favorites, guys, XRP, has been trending the world. This thing is trending all over the place and everyone's getting hyped on it. And interesting, I don't know. Whoa, look at that chart. No, we don't even use that chart. It's a fake price, that one. What was that? It was ridiculous. I hope no one got caught in that. That was absolutely ridiculous. But anyway, you can see here it's 260. And I saw this trending big time because of these new announcements with what Ripple's doing. So you just kind of get this idea that there's this like massive amount of people that are hype training each other to try to get up. I'm not saying XRP is the best coin. You know my feelings on that. But one of the things that you've got to be looking for is obviously catalysts, but more importantly, price action. So we're at a lot of points where we could be seeing resistance breakouts. When it comes to Wednesday, you guys know that's the big one. FOMC statement, press conference, everything else. Will we get the magical cut that they expect? If we get a cut, will we then push small caps and things that we haven't liked for a while? This will be all covered in our next videos. But for now, of course, the main thing is that you make sure to follow that trend, make sure to follow the flows, and of course, pay attention to the charts. TA, number 1, and everything else is, of course, number 2, 3, 4, 5, 6, 7, 8, 9. The main thing about it is you might say, well, wait a second, why is TA number 1? Because it's ultimately showing you the psychology of the market. It's ultimately showing you the flow. And remember, it's not what they say, it's what they do. And that's the most important thing. Guys, thank you very much for the support of the Brisbane trading event. That one is closed now. We're looking forward to seeing everybody there. And I'll let you know if it reopens, if some people cancel. And of course, here we also have a few other things, our free weekly newsletter. Make sure to sign up, links in the description down below. And so if you enjoyed today's video, then make sure also to check out the sponsor of today's video and help support us as well using the code FXEvolution over on Earnings Watch's website. You can get exclusive deals, especially on their lifetime subscription, yearly subscription, and of course monthly. I'm a pretty big fan of the idea of IV Rush. You guys know I'm all about risk mitigation. So it's kind of cool to be able to see how it's historically moved, get 15-minute updates, and obviously an improvement to the platform, which means, again, as you know, I always love a good bit of improvement, taking on feedback and then applying it into the actual programs. Guys, thank you so much for watching. Have a fantastic weekend. Enjoy some time with your family, friends, everybody else. And remember, the markets will always be there and come from that abundance mindset. We'll see you in the next one. Bye for now.